Gold is probably the smartest market on the planet. It's been around longer than any of the other markets for trading dollar indexes, cryptos, S&P 500. Been around thousands of years. And it is always protected against the decay in government-issued money units. In November, we did have a run-up in gold. And the run-up in gold looked good to us because it crossed certain technical levels, momentum-based levels, not just price chart, that said, hey, it's trying to re-engage out of this congestion zone that it's been stuck in since it made its high in the summer of 2020. It had gone from 2,070 intraday high all the way down to 1,673 from August last year to March of this year. It's a 20% drop. And then it's since gone into a range where basically after you had a rally in May, after that March low, you went from under 1,700 up to 1,900, and then you went into a range either side of 1,800, really, if you just look at it. Up, down, up, down. During that run-up in gold in November, we crossed certain numbers, but we also had a caveat. And the caveat was we want to see silver agree with gold. And we defined a number on silver that we wanted to see it close a week out at. And that was above its three-quarter moving average. Now, most people don't use that kind of average because it's a big old clumsy average. It doesn't change once every quarter, instead of like a 200-day. It got up to a high weekly close in November, 1.5 cents below our number, and didn't close over it, and then fell. So silver went right up to the starting gate and said, I'm not joining in. Not yet. Okay. And so they both fell back down. Now, what's going on in gold and silver, if you think fundamentally, aside from the technical noise? It really is noise. Gold's been, mid to upper 1800s, lower 1700s repeatedly following that March low, which has not been taken out since March low of this year. Just noise. It's like, who's in charge here? Ever since mid-June, which is when the Fed first had those minutes that came out after their meeting that announced the good possibility that they were going to shift policy. They used the word taper. That has spooked gold bugs intensely. And there have been at least 4 sell-offs that I can identify that are of the $100 nature since that mid-June break, counting that one, where you get the sell-off based on, oh, gosh, the Fed's going to tighten money. They're no longer going to have inflation, et cetera. Dream on. Okay. And gold will drop $100. Next thing you know, it's corked back up. And so the people who sold that sell-off, they're back to even again. They're not making any money. Okay. It's just noise. How come gold's not collapsing? I mean, if the Fed's going to end the game, right? That's what they said. We're going to end this. We're going to stop this inflation. Well, gold is probably the smartest market on the planet. It's been around longer than any of the other markets for trading dollar indexes, cryptos, S&P 500. Been around thousands of years. And it is always protected against the decay in government-issued money units. It's fiat money. If you'll overlay a chart of gold, go back 50 years and get an M2 chart from the St. Louis Federal Reserve, just overlay it on a gold chart, you'll see that's what gold is paying most attention to, is the continual degradation in money. It is not waiting for other things to tell it what to do. There's a couple good examples, and this is a broad thing. We're not talking micro right now. Think about the correlation people think there must be between the dollar negatively and gold. If the dollar strong, gold must go down, et cetera, et cetera. Well, that's not a good correlation. If you go back and look at it, it doesn't hold up well because the dollar really is only one of several major fiat developed market economy currencies. It's not the only one that's degrading rapidly. So is the euro. So is the yen and others. So gold is looking at all of them. It's not just looking at the dollar. Okay. If you look at a dollar index and go back to 2015, now what happened in 2015? Gold had collapsed from 1900 level down to 1,050 level. Okay, big collapse. So in late 2015, gold had been cut in half almost, and the dollar had a rally. That happened to be inverse at that point, actually. The dollar had rallied from 2012 to 15. But then in 2015, if you'll just get a chart of the dollar index, go to your computer screen, find a monthly bar chart of the dollar index from 2015 to the present, you could draw a line straight across the screen at about the current price level, 95, 96 on the dollar index, where the action for the last 6 years has been half 5-6 points above there and 5-6 points below there. We're smack in the middle of a nothing, one of the most dormant narrow percentage range in dollar index history, and yet gold doubled during that time. So it wasn't the dollar that caused gold to double in price. Okay. And where's gold right now? It's trading around 1,800. What? That's 1% or so below the high close in 2011. So it's not like it's collapsing. Okay. This domino structure that they built, this huge bubble, beyond any bubble I've ever seen in the U.S. stock market history. And we know the policies that undergirded this thing. You can't say, oh, it was a strong economy. Get a chart from the St. Louis Fed called Fed Funds Rate. You can download it and look at it. You don't have to print it. See 50 years of that and see where we were in 2009 on that Fed Funds Rate chart, just above zero. Never in history has it been that low. 50 years, look back. It popped back up a couple percent during that time and then back down again to the mat. We've had 13 years of rates of the cost of money defined by the state, not by market forces, but by intellectuals with power who tell us money's free. It's free in Japan, free in Europe. Okay, what does that do to reality of individuals, families, corporations, even governments, state governments that are planning budgets? When you have a major factor in your thought process, in your planning process, the cost of money priced effectively at zero, and you base decisions upon that, long duration decisions based on the assumption that the price of money will stay low or anywhere near that low, that's like building a bridge, with quicksand pillars. I mean, it cannot sustain, and therefore many errors have been committed. The errors micro errors, millions of micro errors in the economy. And when they come undone based on, it's like being given drugs for 13 years. You make a lot of bad decisions, okay? And you got to think about it. Money is the most essential commodity out there. It's the interstitching of society. It's we're looking for silver to agree with gold in the next upturn. I said it was a 3/4 moving average we're using as our metric. And as it happens in the case of silver, the trigger number is exactly at the 3/4 average. In case of gold, it wasn't. So as we plot our momentum charts, we have a structure, a resistance line that stopped that last rally precisely at the 3/4 average, or on the oscillator at our zero line.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.